foreclosure, forbearance, reinstatement, loan modification, cash for keys, short sales, frustrated landlords, double mortgage payments, and divorce. What every homeowner should know about for failure to make mortgage payments on time. To be very honest with you, if we were the owner of a bank, here is what we would do. First of all, we would try to discourage all borrowers from falling behind with their mortgage payments. This is because when we keep our word, there is an expectation for a borrower to keep theirs. We wouldn't want any spreading throughout the neighborhood about lenders doing nothing about late mortgage payments. However, we would be of the mindset to make it as easy as possible for any client for any reason to be able to correct any default with late mortgage payments. We would allow any client who may be facing a financial hardship before falling behind with their mortgage payment the opportunity to explain to us a strategy they could work with and recover from this situation. This will satisfy the shareholders who are invested with the lender and the federal government. No money will have to be placed in an escrow account by the lender because of non-payment. The remaining balance of the mortgage plus 9 times to equal 10 times the amount of money will be placed into this escrow account and cannot be used by the lender until this account is current or is totally off of their books. But the reason for any lender to be as hard on their borrowers is because of the federal government with their rules and regulations. With this in place, we can understand just how the operation is supposed to work. Keeping in mind all lenders are in the business of making money. They borrow from the federal government at a low interest rate and they charge you at a higher rate of interest, which is called arbitrage. In plain English, it means this: to buy low and sell high, and we know they borrow from the federal government at a low interest rate and lend to clients at a higher interest rate. This is the reason why a lender will give you a small break when dealing with your late mortgage payments. We may think that they are kind enough to work with us, but they are trying to please their shareholder at the same time to keep the government from shutting down their business of lending money. Too many defaults on their books will automatically arouse shareholders and will cause the federal government to shut down the lender. The government will give the lenders several warnings to correct any rules that may be under concern. We are sure that you will understand this because lenders are a major factor in the process when it comes to purchasing a home. We all fall under the statutory laws that govern the country. Now we come to the part that many homeowners don't know about, and every homeowner should know what options are available to them when in this situation. Let us go through every one of these options that are available to the homeowner. Foreclosures. This is a process that homeowners will go into when they fall behind with their mortgage payments. They will receive 2 letters, one after 30 days and another one after 90 days, with the second letter stating the date and time your property will be sold at an auction. Some states will require a 3-day notice before you can reinstate the back payments of the loan. You will receive additional fees such as attorney and court costs and any other miscellaneous fee. You can apply for bankruptcy if there's enough time for you to get a certificate of completion before your filing date. Bankruptcy can stop the foreclosures process for about a month or 2, but all an attorney has to do is file a petition with the court after 30 days to release the property from the court. Forbearance. The option is when the homeowner has an agreement with the lender or servicing company. The homeowner will be allowed to either miss monthly mortgage payments for 3 months or in some cases up to a year with only paying a portion or nothing towards their mortgage payment. But mostly for 3 months, they can pay little or nothing for this time period. At the end of this period of 90 days, the lender or servicing company will require this from the agreement with the homeowner. They will require a significant deposit from the back mortgage payments, and the difference will be divided by 12, and whatever this amount of money is, will be added to your regular monthly mortgage payment. This will bring your account current in 12 months. Reinstatement. This option will allow any homeowner to bring their account current with a one-time payment. You know how this will work because we do this all the time when we buy something and pay for it with cash. This would be the ideal situation only if you had the cash. Loan modification. Now, this option will be a wonderful deal, only if you can qualify for it. You, the homeowner, will have to go through a tedious process in order to get a loan modification. This process will require the homeowner to complete a financial report. This report will exclude the following expenses: your utilities, cable, and your groceries. Now, to our knowledge, we know from yesterday that most lenders will only allow for groceries expenses up to $125 per person per month in the household, and many cable companies have a contract that holds their clients locked in for a period of time. In order to get released from this contract, you need to spend more money. You will need to complete this report with your monthly expenses, and the one thing that the lender or servicing company will not tolerate is a false report. If the lender finds any false statements in your application, they will drop your consideration for a loan modification immediately. And this is a major issue with us also, and we will do the same. Honesty is the best policy for all parties involved, and it will get the best results possible. Now you have to estimate what a new mortgage payment will be and add the two together and see if your new monthly income is more than your old figures. Generally, you will qualify. The lender or servicing company has given you time, and now they want the property owner to start payments with their default back payments now, and not next month, or sometime in the future. Time is not on your side and you should take action now. Cash for keys. This is a process that will not stop the foreclosing process, but it will allow you to receive cash and in some cases an extended stay in the home after the sale of the property. This process will allow the homeowner to get more time and receive some cash before moving out of the property. The key issue here is for the homeowner to propose this to the lender or third party who bought the property at the auction. This agreement will be that the homeowner will not destroy before leaving, and they will have generally cleaned up the house, such as broom clean, and the house will be inspected before any money is exchanged. Short sale. Just like with cash for keys, you will need to get an application from the lender's mitigation department and complete this form to start this process. There is one other thing that makes a difference from the cash for keys, and the homeowners will have to obtain a buyer for the property for the lender to really consider this offer. With this in place, you have now started the process, and there are many documents that the homeowner must submit to complete this process. Just to name a few: authorization form, a hardship letter, 2 months of present pay stubs, 2 months of present bank statements, 2 years of income taxes return, and one of these a monthly, quarterly or yearly financial report. The cash for keys and short sale both will require a statement from the lender to waive a deficiency judgment against the homeowner in the agreement. This judgment is the difference between the auction sales price of the property and the difference from the present value of the property at the time of the sale. For example, the present value of the property is $300,000 and the sales price from the auction was $250,000. The difference is $50,000. But here is another issue. The IRS may consider that $50,000 as income to the homeowner if the lender issues a 1099-C to the homeowner. However, theirs is a process to eliminate these deficiency funds depending on how this cash was used. Call William or visit our website at createrei.com, click on Sell and then click on Pre-Foreclosures, and complete both the short and long forms. This will allow us to spend more time discussing your financial situation when we contact you. And thank you for your viewing time. Don't forget to click on the bell for future videos.